Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday.
Hello and welcome to this week's episode of the Prime Property Finance Podcast. My name is Mark and in today's episode it's myself and Gareth just doing our Christmas episode. So good grief, it's that time of year already. Where we're all just about to down tools for a little while and enjoy the Christmas break. So we thought it an ideal opportunity just to reflect back on the year that we've been running this podcast, what's happened, some of the things we've spoken about, some of the things we've seen, the wins, the highs, the lows, and everything in between. So without further ado, I shall bring in the podcast and happy listening.
Mark, welcome back for the latest episode. Something a little bit different for us for this one. It's Christmas week and we just wanted to have a little bit of a festive cheer and a bit of a light-hearted episode, just kind of recapping the last 12 months, what's gone on in the mortgage market, what's gone on in the investor market and a little bit about the wider economy and just pulling all of that together and trying to learn some lessons and having a bit of a laugh along the way. So, how are you? Are you okay?
Yeah, I'm very well. Nice to see you brought the Christmas weather with you as well. Snow everywhere, well, rain. Welcome to Christmas in Wales.
Absolutely. So looking forward to a break with the family, young kids, and going to keep us on our toes. So very excited. They're getting more and more excited as it goes. So looking forward to signing off now and the team and everyone having a bit of a break, ready to attack it again in the new year. So let's jump into it. So, like we mentioned, just a bit of a fun acknowledgement of the madness that we've had this year, really. There's been a number of rate changes. Those have come at times when they weren't expected and they haven't happened when they were expected. And the fun that comes with that, you know, when the interest rate goes down, people are ringing saying, does that mean my rate's already going down? And that's not necessarily the case, as we've done in other episodes to say, you know, it's already been priced in the market. Obviously, there's been quite a bit around policy change, especially in England with the renters reform bill. So we'll touch on that shortly. Obviously, we've had the budget and that's, the outcry from that. Not that it wasn't as harsh potentially for landlords as it could have been, but ultimately is a big tax grab and one of the biggest ones yet. So that's just a few more headaches for landlords and investors. And we're just trying to review those and see what's what. But ultimately, we're going to sort of celebrate some of the wins. We're going to review what's gone on. Obviously, you want to look ahead to the next year with some positive outlook for the market ahead. So let's dive into it.
Yeah. Okay.
What have you got down as some of the biggest moments in 2025?
The year has been it didn't feel like it at the time, but when you reflect back, it has actually been somewhat stable through spells. We have had periods of change. I think the trying to second guess everything is probably where the turmoil comes from. People are too afraid to make decisions, and rightly so, because of pending budgets, renters reform bill, and those sorts of things. So some of the biggest things have been the budget, how Labour have acted since they've got into power. So that's created some uncertainty. The renters reform bill, as I say, that has been, mooted around for a long time now. So make of it what you will. There's a whole debate to whether it's good, bad or indifferent. But the fact is it's in, and you now know what the playing field looks like. So you can adapt and amend accordingly. EPCs, still very much up in the air and all of those sorts of things. We had the brakes go on the leasehold reform. So, a lot happened, but was it material and did it fundamentally change the market? Probably not. You'd have regional impacts, I'm sure, and some national ones, but I can't say that, we've not gone back to 2008 with an economic crash or any, there's been nothing catastrophic. There's just been bumps, peaks and troughs, really.
Yeah. 100%. I think it's just been a little bit business as usual, isn't it? And I say for those serious investors that we work with, they've just been active and carrying on doing what they do. I think some people have sat on their hands a little bit, especially in the run up to the budget, because of all the talk that was going to come of potential changes that were going to be made, which actually didn't materialize. And so, I think, like you said, the big one for me is obviously the renters reform bill is huge in England. We've done an episode with Lindsay Yule, who is an investor and estate agent in Scotland, sharing some of her experiences going through that. So if you are an investor in England and want to know more about how that may affect you with those changes coming in, then I definitely recommend going back to listen to that, because that was a really valuable episode. And like you said, I think the other one is one of the other high item agendas is around EPCs and the impending changes. And ultimately, we still don't know whether EPCs are actually going to be a thing going forward. And a lot of people are making amendments to their properties on the basis that it's going to happen, and it may not even happen, or the goalposts may have moved. So that'll be a watch this space for next year, because we will get some guidance on that next year, I'm sure. Anything else from your side in terms of big items?
No, I just think the whole rhetoric this year has been, it's yes. The first budget from Labour was a huge budget in regards to tax. This one, is not as big, but has had some strong messages in there as well. And I think, what we've sort of transitioned over to a different way of running the country, and you take of that from what you will. I mean, you can get caught up in all of that, can't you? You can keep reading the news, getting dragged into all the immigration conversations and everything else that's going on. But ultimately, just getting about your business, doing what you do. And we've seen some investors do really, really well this year. Some great property transactions that we've been involved in. Some not so good. And that's the same as any other year, really.
All right. Well, let's talk about some of the wins. What have we seen as potential wins from sort of investors in general this year?
I think one of the things we've seen has been the continued increase in rents. Obviously, we're talking about this from a landlord perspective or an investor perspective, not necessarily from a tenant perspective. There's two sides of that conversation, obviously. But it wasn't that long ago, it was a couple of years ago, that Liz Truss did her sort of mini budget. Interest rates went wild. Landlords got a shoe in really around interest rates, and mortgages jumping through the roof and rents not keeping up and so on. The boot is on the other foot now. Interest rates are actually settled down. In fact, have gone down somewhat. And we've seen rents go up. So just goes to show how cyclical things are. And the idea is not to panic and those sorts of things, because these things have a habit of correcting themselves. So I think the really strong thing is the rent demand. And that's found its way into the actual rents that people are achieving.
Yeah, absolutely. I think there's been also some wins for, like you said, there's been some very good deals about, because there has been a little bit of people waiting and sitting on their hands. And, that's caused some opportunity for other people who are serious to get in there and nick some good deals, especially in this sort of semi-commercial mixed-use space, some bigger deals with a lot of people holding off on. So, there's been some great opportunities, like you said, that we've seen, and other people have been sharing some deals that they've been doing, and there's been some phenomenal deals. So there has been deals, whilst other people have been, the Warren Buffett saying of be greedy when others are fearful. And, people have been sweeping up some of those deals because of people sitting on their hands. So great place to be in.
Yeah, we've seen probably I've had more conversations about below market value purchases this year than I have ever. And when you look at the reasons as to why people are emigrating, leaving, whatever reason that is for, there's been definitely a trend in that. So people just going, I'm leaving the country, selling my house. And some investors have picked up some really interesting purchases off the back of that.
Yeah, they need to get on that. I wonder why they're leaving so much. But, let's not get into that. Okay, so one of the other things that we've seen just in kind of, we've talked about rental demand, we've talked about changes in circumstances and regulations and things. So what we are seeing as a bit of a trend then, more so than a win, is just the increase in the use of limited companies for buy-to-let. I think this year there was a record number of limited companies set up as SPVs, which is a special purpose vehicle. So the record number was created. So whilst everyone's saying that landlords are leaving the market, yes, they are leaving the market, but there's also plenty of people coming into the market, which is naturally cyclical anyway. And so there's been a record number of limited companies set up, and the majority of investment stuff that we see now is all done via a limited company anyway. So that's probably been something just a note, really.
Yeah, definitely.
What about some of the less popular stuff then, in terms of things that have gone against landlords or investors, or some of the losses then, or negative stuff that's happened?
I've certainly seen some of the negativity manifest itself in valuations. Is that people being overly optimistic versus the actual value? I'm not so sure. But we are certainly seeing, valuations not keep up with expectations in many respects. So, and when you do speak to valuers, they're because of this perceived uncertainty, they are naturally going to bake that into valuation thinking, liquidity, and so on and so forth. So, I think the running theme this year has to be the amount of valuations we've ended up either having to make do with, and it's not quite delivered what we expected, or actually going back and trying to challenge the outcomes of those. So that seems to be a bit of a theme. And I guess that probably feels like that's a true reflection of where we're at, in so much that people are because rents have gone up so much. I think people automatically assume that feeds into property values. But that obviously, as we know, isn't the case. And I think that people are perhaps chancing their arm a little bit, maybe, where it comes to, it's 180, but I'll put it in for 200. See what happens. Oh, it's coming at 175. Okay, no worries. We'll just move on, type thing. So that's what I've seen, I think, on the, if you like, the negative side.
Yeah, I think for me, probably the one that stands out is more development, where, people have, the natural life cycle of a development is, by the time you put in for planning and you identify a site and you do your due diligence and you go through the planning process and then go through, actually buying the property and then starting the project and things. That's a long period of time, depending on the size of it. And there's been some, stories where that, valuations, as you mentioned, have changed, but the supply of labor and materials, so the cost of actually delivering that development, has gone through the roof. The inflationary pressures on materials and labor costs, and the supply of labor, the availability of good trades has really impacted a number of people in developments. And that's a space that I think has, we hear of some of the nationals having mothballed some sites on the basis that they're unviable. And so, that for me has been probably one of the most challenging markets, and a lot of people kind of sitting tight on developments at the moment.
Yeah, and could argue this is a fallout of the whole Brexit, COVID. There's plenty of reasons for it. We know build costs have gone up, both in labour costs and material costs. Supply chains are affected. I mean, this morning had to hang around for the electrician. That's my 5th attempt to get an electrician to the house, just to do some work on a domestic property, just being done there. And that is just a symptom of where we're at. There's so much demand out there for trades at the minute. They can pick and choose their pricing and their jobs. Yeah,
100%. And then, so just in terms of what are the, on some of the funnier side, what have you seen in terms of what are the things that tickle you a little bit when, some of the mortgage myths then, if you were, what are some of the things that tickle you a little bit when, here we go again, kind of conversations, things people have heard down the pub and various things. What are the things that have tickled you this year?
2 words: commercial valuation. I think if I get, so I mean, we joke, and we've done episodes on it in the past as to when they're relevant and when they're not. But there's a lot of people coming back saying, I'm going to get a commercial value on this and so on. And I'm, and it's a 2-bed flat somewhere, and that sort of thing. So we joke, we try and manage expectations, but the amount of people who come to us have worked their numbers out on a buy, refurbish, refinance with the commercial value at the end, miss some crucial steps, and then fundamentally they're tens of thousands of pounds short. So I think, and I don't think it'll be just this year. It'll be every year. Commercial valuation, it's a thing. So those are one of the ones I just ask a few questions to ascertain: is this a genuine thing, or is this a pipe dream?
Yeah, and I think the other one as well is probably around the interest rates coming down and how does that affect things. It's not a myth, but it's just a little bit of a misunderstanding of how pricing works. We've tried to answer those questions with our episodes to make people understand how mortgage pricing works. So that was always another one as well. So let's move on then to sort of naughty and nice list. Who, if you had to put a list together, who would make the on the naughty list this year?
Valuers and solicitors. Thank you to all our valuation and solicitors colleagues.
No, I was going to say. But, look, I think, ultimately they get a bad rep.
Yeah.
And this is another one, going back to what we talk about, is when we apply, we help people get a mortgage. We put we put the valuation in based on the figure that they've given us. And then they come back to us and moan that we've got them a down valuation. And we say, well, one, we aren't valuers, and that's not our role. And two, we're only working off the figure that you've given us in the first place. So that's always a bit of a challenging one to navigate.
Yeah, I think, valuation figures aside, there are some good valuers out there and not so good valuers. And you can tell the good valuers by the speed of response. How quick do they come to you as the person who needs the property valued and those sorts of things. So, joking aside on the valuation front, yeah, I mean, that'll be what it'll be. But we have had some horror stories this year with just trying to get answers out of valuers, whether we can get them to the appointment. For those who have seen how VAS panel works, is you'll get a window of time in which they say they can assess the property, and then just not doing it. And they're not answering and speaking to us, and we've already paid the fee and that sort of thing. So, yeah, that's something to be aware of.
Yeah, great point. I think for me on the naughty list is the uncertainty around EPCs we just touched upon. It's frustrating from the government. We're lacking some clarity now, and potentially EPCs are outdated in the way they're done, and we just definitely need some clarity on that going forward. And then I guess also the government with, they came in saying they're going to be build, and they were going to make reforms to planning and various things. And all of the last budget was very anti-growth. There wasn't anything in there that seemed to be pro-growth. They're increasing taxes, putting more pressure on affordability for tenants because of rising costs. And obviously there's changes coming in with the renters reform bill, which is fine. That's not necessarily a bad thing. I think is a good thing, but there's just the additional costs now on tax, for instance, is just going to push rents up even more. So it's hurting the people that it's supposed to help. So
that's okay. They'll just increase their welfare to cover the cost. We're all right.
Yeah, exactly. Anything else from a lender perspective on the naughty list?
Yeah. So, and this is a trend that we see in the space is you'll think you've sent them all the information as per the underwrite, and then they'll come back with a list of another 15 items. Now, I understand based on the answer you give in one section will trigger another few questions, but sometimes it does seem a little protracted, a little onerous in some of the things. So I just think they could be a bit better with that. Just ask for it all up front. Yeah, and the worst one, my biggest bugbear is when they decline it over something they knew on day one. That for me is just unacceptable. You've wasted time, effort, and money.
Absolutely. Okay, jumping onto the nice list then.
Yeah.
Who's made it onto the nice list for you this year?
So there've been some lenders as well. So whilst we can criticise them, they also do a lot of good things. I mean, we wouldn't be in business if it wasn't for having good relationships with lenders. So we've had
solicitors and valuers.
We got to include them. Only certain ones, though. Only certain ones. Only the ones we like. Yeah. So I've, in particular, I had two cases, same client actually, 2 auction purchases in 1 month, and both of them they were bought one, then went to auction, bought the second. So there was a time between it. And both of them were completed within 10 days. And that wasn't one of these scenarios where we've gone, the valuation was already done and all that sort of stuff. It wasn't. They actually did it start to finish 10 days. And I have to say, I took my hat off to them. The client was on the ball. But yeah, that doesn't happen often.
Nice. Well done. Hands up in the air for that one. I think one for me is probably tenants. I think tenants and landlords and in the press, landlords a little bit give tenants a bad rap. But there's good tenants out there, and the majority of tenants are good and want to respect and the place they live and look after it and treat it like their own home. And they probably don't get enough of good. And that's why we were saying earlier, it's been good to see the renters reform bill, because it's professionalising landlords and bringing up the standards of properties. So it's just getting rid of rogue landlords effectively. So a nod to good tenants. Another one I'd like to mention is obviously our listeners. Yeah, they're all on the nice list. Obviously, we launched a podcast this year, and if it wasn't for people listening, downloading on at each episode, we're getting good listener numbers, and we really value your listening, and it makes it worthwhile for us, because we don't really get much feedback apart from messages, or when people see you and send you messages. We get the odd DMs and things. We get a couple of questions pinged through, which we'll probably answer a few more next year. But yeah, thank you for listening. Thank you to our clients as well, obviously, for supporting us and helping us grow. And obviously the team at Prime Property Finance, they're all on the nice list as well.
I don't know.
They do a fantastic job. And
we let them on.
Yeah, they do a fantastic job, and really proud to have them as part of the team. They do a great job for our clients, and we wouldn't be able to take the time out to do this if it wasn't for them doing all the hard yards in the background. So yeah, we're really valuable. We've got a great team, and we're looking forward to having a Christmas do and celebrating this year. Anything else from your side?
No, I don't think we can be too nice. Can we? We want to be balanced. We haven't been too aggressive on the nasty side, and we haven't been too aggressive on the nice side. So I think there's a good balance there.
Fair enough. So let's just kind of wrap it up then with some predictions for 2026. What are you thinking?
Well, I'm going to stay away from interest rates for mine, because I'm not that brave. And I don't think I've had any of them right so far this year. So I should probably be on the naughty list for that. So no, I think we're just going to continue to see the professionalization of the space. I think you're going to see more and more accidental landlords. So those landlords that own just one property, I think you can see more of those leave. That doesn't necessarily mean we're going to see the amount of stock in the space reduce. I just think that's going to create opportunities for more professional landlords to acquire those properties off them. So it's as a direct result of all the regulatory changes that are going on at the minute, I think. And again, it's not really a bad thing. If you want standards to increase, you've got to give it to people who have got the systems and processes in place to meet those standards.
Yeah, 100%. Yeah, I agree with you there. I tell you what, then I'll give it a go. I will try and predict base rates. I think interest rates will come down next year. I think if the government does get a control on inflation, and whether they do or not is obviously dependent, but I do think that by the middle of the year, we will have another drop in interest rate, which will be great for landlords that are coming to refinance. I also think the other positive going into 2026, I think rents are still going to keep rising. I think what we talked about is the small landlords with properties held in their personal name will exit the market. And I think that will impact, even though most of that is probably buy-to-let stock, it might not all be. And I think that there will be a slightly tighter supply, which will just keep pushing those rents up. And obviously, again, the other reason that some of the professional guys might offload some stuff based on the renters reform bill, I think that will have an impact on the market as well. So I think rents will keep going up, rates will come down. So I think overall, I think things are looking good for those landlords. I think there's a bit of extra cash flow in there potentially, but it's just being prepared and looking after the right properties in the right locations with the right tenant profile is going to be crucial. And like you said, preparing and being a professional landlord. You've got to run it like a business now if you want to really make a go of it.
Yeah, I totally agree.
Awesome. And I think the other thing I think is probably come a little bit more competitiveness, I think, will come to the market. I think as things do settle, the impact that has on lending from lenders' perspective, hopefully if there's more lending and more people trying to get money out the door, then hopefully that drives competitiveness as well. And not just so much competitiveness from a rate perspective, because they can't always impact rate, but what they can impact is criteria, and being a bit more innovative and a bit more loose with the criteria and accept properties that they may not have accepted before, and just gives us more lending options, really.
Yeah. On the note of competition, I think also, the byproduct of this for tenants is that as the standards increase, they can expect more from their properties. So we already accept it needs to be in a good livable condition, but I think that standard is just continually going to rise, especially as as it consolidates into fewer landlords as well.
Yeah, absolutely. Well, look, conscious of time, I think, everyone wants to get off and enjoy their mince pies and what have you. So thank you, Mark. Thanks for your time this year on the podcast and for sharing your knowledge and experience with our listeners. And obviously, thank you for being a great business partner and a great advisor for our clients. I'm looking forward to the challenges and the growth and the fun times ahead into 2026, which we shared in some of those on other episodes as well. So, just want to say thank you to everyone. I guess that the closing sentiment for me is, as you're wrapping up your year now, if you've got a portfolio, you spend some time as things are a bit quiet. If you've got a quiet day in between Christmas and New Year's to review your portfolio, make sure all your spreadsheets are up to date with and make sure that you are planned and ready to go ahead into the new year and review your goals, see how we got off against last year's goals, prepare your goals for this year. And if you want to jump on call with myself or Mark in the new year to discuss your plans for the year ahead, then please do.
Excellent. Yeah, and thank you to yourself for hosting most of the episodes. So I do appreciate it.
Thank you, guys. Enjoy some chocolates, Christmas dinner, turkey, wine, beer, whatever it is that you do. A nice cold dip in the sea or lake somewhere on Boxing Day or New Year's Day, and have a great time with your families. We wish you all the best. Merry Christmas and a Happy New Year, and we shall see you soon. Thank you very much.
Thanks very much, guys. Take care. Okay, so there we go. That was our last episode of the year, our Christmas special, if you will. Yeah, been a really good year on the podcast. Lots of guests, lots of things, topics covered. I've learned some things as much as share some knowledge as well, and I know Gareth has as well. Some great content in there, as always. Some key things that stood out for us for this year. So really interesting actually to reflect, because when you're in the thick of it, sometimes you can't see it for what it actually is. So at the time, I think we all thought it was probably a little worse than it was. And when you reflect back, I think you'll probably agree with me that things can always be better, but they can certainly be a lot worse. So on that note, all that's left to do is to say thank you ever so much for listening this year, guys. Really do appreciate it. I hope you have a fantastic Christmas and New Year, and then you share it with the people that matter most to you. As Gareth said, if you get the time, just reflect on what you did this year, what your challenges are for next year, and what you're hoping to achieve. And if we can help in any way, then please do just drop us a line. That's what we're here for. So yes, Merry Christmas, everybody. Thanks for listening, and we shall see you in the new year. Take care, guys.
Thank you so much for listening to our podcast. We hope you have learned something and have some tips to take away. We'd be very grateful if you enjoyed the show. You could give us a review and share with anyone that you know that may be interested. And of course, subscribe to the show so you can get notified when a new episode is released. If you'd like us to answer any questions or go deeper on a specific topic, please drop us a message at primeproperty.finance. See you on the next episode.